I'll gather my macro picture based on technicals, but it's still coming from a fundamental standpoint. I know what the sentiment, the risk sentiment, how what I feel like it's going to be on the day based on technicals, but I'm still going to go and see, like, is Barkin speaking, Kashkari speaking, or Powell speaking, or something like that. I'm still going to do that because I know it affects the market. But all of my actual timing and entry decisions and my risk making decisions are all based on technical analysis, even though my sentiment view comes from a macro technical perspective.
Welcome to the AlphaMind Podcast, hosted by Stephen Goldstein and Mark Randall. The podcast which is always looking to help traders, whether they're new to the game or whether they are seasoned and experienced traders, explore how they can be better, more productive, more effective traders by looking at the human aspects of trading performance. The AlphaMind Podcast proudly partners with the esteemed Society of Technical Analysts, a distinguished not-for-profit organisation dedicated to providing informative and educational resources for its members. We're excited to announce that their upcoming second Technicals to Trading Systems one-day conference in London, featuring an array of exceptional speakers, will be held on Tuesday the 16th of April. This offers both in-person attendance, where you can take part in fantastic networking opportunities with like-minded people, or you can view it online. Visit the STA website at technicalanalyst.com for further details and registration. Furthermore, we're thrilled to endorse the STA's outstanding home study course. As a special offer for AlphaMind Podcast listeners, you can enjoy a £100 discount on this exceptional program, crafted by world-renowned technical analysis experts. Visit our website at alpha-mind.net to learn more and take advantage of this exclusive opportunity. Now, on with this week's podcast.
Well, welcome to this week's AlphaMind Podcast, and we're delighted to have someone that both Steve and I have known for many years, from our connections with the Society of Technical Analysts and all those fine professional people that work within there. And we've got Rajan Dhall with us today. Really interesting journey. I think there's lots to be really learnt from how he's navigated his course right through to a very successful business now, but perhaps digging into the past and understanding what drove him into this space and what keeps him going. And I won't describe his story because I actually want Raj to actually go back in time a little bit. And perhaps, Raj, welcome to the show anyway. And really just, you're suddenly into trading, but we know that sports was a big thing years ago. And at what point did you feel that actually trading was a space that you wanted to put your attention toward?
Yeah, no, first of all, thanks for having me. I've been a listener for a long time, Steve and Mark, and I love what you guys do. So thanks first of all for that. But being a sports performer when I was younger, so I played academy level football, professional standard academy level football at Brentford for most of my career. Then had short stints at Watford and Chelsea, just trying to break through into getting at a higher standard, which unfortunately I couldn't. But obviously I'd been performing for such a long time on a football pitch. And then when I went to college and university, I was studying sports science, and I got a job in the gym at JP Morgan in Blackfriars, actually. So I didn't have any idea that I was ever going to go into trading, and I never thought I wanted to do it. But the thing is that in the gym where I was a personal trainer there. The customers that I were getting had like a really strong mindset. So I trained some marathon runners. I trained a marathon runner who in his 40s was running sub 320 marathons, and really elite standard. I trained a triathlete who was really, really good as well. And the links were there for me at the beginning, even though I didn't know. I was very, very young. I was in my late teens, early 20s when I had that job. I left there when I was about 23 or 22, 23 or something like that to move into finance. But really what coined it for me is that I started making really good money in the gym. I used to charge a decent amount of money for my sessions. And I used to ask the people that I was training, I used to be like, look, I'm making decent money now. Give me some shares, or give me some tips to put somewhere I can put my money. And there was a couple of instances. One I clearly remember is one of the guys was an equities trader, and he said, "Look, like he said, I'll check out Tesco's at the moment. They, he was telling me they seem a bit undervalued, whatever, whatever." I opened, one of the first eToro accounts and IG accounts back then for such a long time ago. We're talking like 18 years, something like that, years ago, and I made some really good money, like just talking to these guys, and that's how it started. I just got hooked from there. I started trading, and I wanted to be on the other side of the fence when I started just investing, my profit from personal trading. I got hooked and I wanted to be on the other side of the fence, and I was learning through these guys subconsciously and just talking to them about trading, and I just caught the bug. I just got absolutely hooked from there, and now I've been trading for 15 years.
Interesting. And having been a sports performer and now obviously a trading performer as such in this new guise as you transitioned. Did you feel there were huge similarities? Did it just feel as though you were doing a different type of sport?
Not at the beginning, because at the beginning I felt a little bit out of my depth in terms of the educational side. So like I had to get myself up to speed. But what I did was a little bit like a retail trader's journey, but I did it from a professional standpoint. So I got actually a job selling. Actually, my first job was as a clerk in a foreign exchange desk. So like a physical foreign exchange desk. So some guys left JP Morgan and they moved to an office near Windsor, and I lived in West London, so it was easy for me to travel there. And basically, they would put out these FX transactions, physical FX transactions, and I used to be the one that used to do the receipts, and I used to physically do the writing up for them. It wasn't the days where it was all automated and mechanical. So I had a good grounding in terms of having to physically put together these remittance sheets and things like that for these FX transactions. Slowly and slowly, I worked my way up, and I started selling forwards and options. So time options, price options, basically things like that in the physical FX space. Then I worked on an EFX desk, and then I slowly just started moving more into analysis, and I worked for some analysis companies. Like I worked for quite a few of the big names like FX Street, TradingView, New Squawk, which were formerly Ran Squawk. So I worked on the Squawk doing the audio news. And I then got a job trading at a fund. So I managed about $36 million with six other traders, and we had junior traders there. And like where a retail trader is like searching for the thing that's going to make them a good trader, I was doing that from a professional standpoint in the city. I was searching for, like the fundamental guys must have something that the technical guys don't. Oh, the technical guys must not know something that statistical analysis can take over. So in my mind, through my 20s, I was just getting jobs in all different areas in the city, trying to find the holy grail, but getting access to like really good quality information from like the top banks and some of the top people in the city. So I did it a different way, but I was still searching for the same thing.
Hi, Raj. Thanks for that. And welcome to the AlphaMind Podcast. Great to have you. Now, I know you're running a prop firm now, so you've gone from this original journey of not having a lot of interest in trading to now becoming a profitable trader and someone who is sustainably making money with their trading, running a prop firm and helping develop other traders. So perhaps you could take us on a little walk through that journey.
Yeah, so for the whole time I was trading anyway. So wherever I was working, whether it was on the news desks, whether it was at a fund, whether it was selling forwards and options, the whole time I was trading anyway. I had my own personal accounts, and I was trying to build up my experience from being in these institutions, but trying to gather my own thoughts and my own understanding of how the market mechanics worked. So that was one thing that was key from all of those points. As time went on, I realized that kind of my knowledge may not have been where it needed to be at that particular time. So I took a course at the Society of Technical Analysts. I did their diploma course. I also had to do regulatory exams, basically to get FCA accredited to sell products and things like that as well. And I was just the first account that I built up. It sounds crazy, but I started it with like the minimum deposit at the time because I'm a very risk averse person. So I opened it with like basically like $250 or $300. I took that account, believe it or not, up to $4,000, and I didn't know whether that was good or not. So I was looking at all of the other traders in the city, thinking these guys are millionaires. I've just made, turned $250 into $4,000. I knew it was good, but I didn't think that I thought there was another level I could get to. So what I did is I took 2 weeks off from work, and I thought, oh well, if I can do that, like taking positions that last maybe 2 or 3 days, I wonder what I could do if I was trading every day. So like with staring at the screens, looking at the same charts and trying to make the same trading decisions, I lost half the money. Like within that 2 weeks, I lost because it turned into frustration. All of those emotions started getting amplified, like revenge trading, my biases, like, oh no, I just got stopped out. I need to enter it again. It still looks like a good trade. I went through all of the same emotions that, every trader would go through, and I cut it off at the 2,000, the £2,000, and that's when I went and paid for the STA course, and then I opened another account and I started going and going. The people at the STA must have hated me because I'm so pedantic. When I went through the course and I was learning about all of these different indicators in every different chart, like for example, if they gave me an RSI, I would test an RSI on 4 different time frames for 100 trades, and I'd come back to the lecturer and I'd say, "Well, you taught me this last week. This is what I've learned." Like, you know what I mean? Like, it might not make any sense to me. So they described it to me as being like, "Well, here's a toolbox. Here's all your tools, but I'm not going to put the cabinet together for you." So that's how they described it to me. It's like you're learning all the tools, but you've got to get to building and developing your system yourself. So that's how I kind of figured that out, and it was a long journey. I didn't turn consistently profitable maybe for 4 years. It took me about 4 years to be consistently profitable. The first 2 years I was struggling, apart from the first account, and then I was just level. I was just making money, losing money, making money, losing money. But after year 4, that's when it turned interesting for me.
Okay, brilliant. And you know what? It's fascinating hearing you talk the way you have, because first of all, we believe that you don't become successful straight away ever in this job. That it is a learning journey. I've asked a lot of really successful traders, some of them who have featured in Market Wizards books. At which point, or how many years did it take for you to feel, okay, I think I've got this. I think I'm ready to commit myself for life, and that I should, if I follow this path, always make money. And often the answer is around 6 to 7 years. They may have started becoming profitable a little bit earlier, consistently, but they never quite really believed in themselves for, say, 6 to 7 years. Now, some people have said a lot longer than that. Okay. I felt in my own journey it was a lot longer than that. It took me a lot longer. I felt I was kind of blagging it a little bit for many years. But there's something about the way you've described that learning journey, which is fascinating for me. It's like you've built the foundations. You've not gone in there to make money straight away. You almost have built all these different tools in these processes. Now, it reminds me of a client of mine who's an extraordinary trader, who may be listening. I won't mention his name, but he's based in Germany. And he is a brilliant trader. And his learning journey sounds quite similar. In fact, he was a broker for, I think, the first 10 or 11 years of his career. And he just sat on the other side of people's trades. He was taking orders. And from doing that, he got to see what the people who were succeeding, which wasn't very many, it was a small percentage, what they were doing and what everyone else was doing, all the common mistakes they were making. And he observed it and he studied it and he took that in before he went live with his own trading. So it was almost a similar process. What works, what doesn't work, what's the mistakes, what's the errors. And it's a fascinating approach, but it's almost subverting what most people do. They think they go out there, they learn a system, boom, I'm going to be a multimillionaire before the end of the month.
Yeah, I wasn't in that sense, Steve. I wasn't because just naturally being risk averse, I mean, there's a couple of things I must say. I'm fortunate enough to meet some amazing, incredible people that I've been able to learn from in this journey. And I don't think I would have been able to do that. Plus, my wife is very understanding. So the combination of meeting those people like yourself, Steve and Mark and Axel from the STA and Clive and Karen, all of these people that have kind of helped me, and some of the people that I've worked with as well, that really shortened that journey. I think it could have taken longer if I hadn't met the right people.
Yeah.
And the other thing, I'm a big believer in, like, in opportunity. Like, you've got to put yourself forward in these places. Like, for example, at the STA, when it first came round that they needed somebody to help with the lecturing and organizing the lectures and stuff at the London School of Economics, I was quite lucky enough to kind of jump at that chance and kind of help out. And then I obviously used to lecture as well for the STA, and I learned a lot lecturing as well, and listening to, like, I listened to your lecture about 8 or 9 times, didn't I, Steve? You know, but I learned a lot from the questions that the other people were asking in the room, and having heard that lecture so many times as well. So I was really lucky. There's been a blend of some really good experiences for me. And one other thing I wanted to say was, when I worked in the trading desks and at the analysis companies, I made some good friends that went on to get better jobs and get very good jobs at good places that I kept in touch with. So Mike, a good friend of mine, he works for one of the biggest prop trading houses in Europe. I've got a friend that works at Goldman Sachs. I have another friend that's a retail broker who deals with, like, large accounts with premium accounts, who I can ask questions to. And having different people in different areas of finance, of trading, that I can, like, if I've got a question, or I need a view, that I can just go and ask or get their opinion, is invaluable. But it doesn't change my opinion. I'm stubborn, but during my learning process, it really helped a lot.
So yeah, it's great to have as many different opinions and views, and we always say, talk to people, have little groups of people that you can chat with about this sort of work. I mean, that was one of the beauties of starting in a bank for me. And I know Mark's the same. You get so much information, and I mean, it's as much as the noise that's in the air in these places that becomes information. But and just to sort of bring in the STA, I know we've mentioned them a lot. I think they've been our podcast sponsor for so long. Their courses are brilliant. You know that. I know that. We do encourage people to take them, and it's also worth noting that they're not a profit organisation. They're a member-led organisation with all the benefits accruing to their members. So I've been delighted to give them a little acknowledgement in the acknowledgement sections of my new book, by the way. It's a great organisation.
I think that part of my journey, my trading journey, is probably my favourite part. Like, I'm fortunate, and I feel blessed enough to say that I was able to lecture, for the STA, and listen to all of your lectures as well. And going to be in a like-minded trading community, and being able to speak to those people and learn from the experts in their field, like Jeremy Duplessis with point and figure, Clive Lambert with market profile and his candlestick stuff, and like all getting talking to these top people in their fields. It kind of helped me, because when I was developing trading systems, and I've now must have developed more than 2,000 trading systems in my life. I've been serial at developing different trading systems, and when I go out to test them, and I like something like market profile quite a lot. And me and Clive, we'd, after an STA meeting, we'd go and have a chat about market profile. And when I did I did a whole talk about volume profile and market profile at one of the monthly meetings, and Clive would then come and ask me questions. And there's nobody, like, we feel like nerds, right? But there's nobody else in the world. There's nowhere else where I can find this kind of chat, and where I can have these chats with people. Like, we're all like a tribe that's in one place, and it's needed.
Yeah, it is a great group, and I think that's one of the things that people forget about with these organisations, and they also forget about with technical analysis. That there are some people that deride it, but I always like to remind them that Jim Simon's the roots of his quantitative system were based on technical analysis. Stanley Druckenmiller, who was as fundamental as you could get, used technical analysis to refine the timing and entry of his fundamental ideas. It is a brilliant approach to trading that's got so many edges, and there's a lot of people that try and learn it from a 5 or 10 minute YouTube video. And when I think, there's people who study it for years. There is so much to be learned from learning it properly.
Yeah, it's unfortunate that that's the case. I think, there's obviously going to be people that try and take advantage in any industry, and that is one of the unfortunate parts. I think when I'm training the traders that I have at DND Capital, I always go back to the purest forms of technical analysis. So if it's something that they're interested in, like point and figure, I'll send them over to read Jeremy Duplessis stuff, or if it is market profile, and then I'm a generalist. I'm a there are certain elements of technical analysis that I absolutely love, but I'm definitely a generalist. But when we were talking about Stanley Druckenmiller and Jim Simons, I do take a view, but I take a macro technical view. So every single day when I start my trading day, I only trade the US session, by the way. I will go and see technically what UK and Germany have done, like DAX and the FTSE have done. I'll go and look at what the Treasury futures are doing. I'll go and see what gold's doing, what the US dollar's doing, and I'll gather my macro picture based on technicals, but it's still coming from a fundamental standpoint. I know what the risk sentiment, what I feel like it's going to be on the day based on technicals, but I'm still going to go and see, is Barkin speaking, Kashkari speaking, or Powell speaking, or something like that. I'm still going to do that because I know it affects the market. But all of my actual timing and entry decisions and my risk making decisions are all based on technical analysis, even though my sentiment view comes from a macro technical perspective.
Yeah, that's very interesting. I think the podcast that precedes this, Mo Ali is talking again about the value of macro, and we had a conversation there about actually how often people trading short-term technicals, well, that's their world, but actually they should start with the macro view and then focus into the micro view, because there may be a 200-day moving average going right through the middle of the day that they're totally unaware of. And I think and a lot of people don't pay attention enough to that, and of course getting the tone, understanding the general tone and flavour of what's going on as part of you trying to build the narrative.
Okay, going to return to the podcast shortly. Just very quickly, I want to tell you about my new book, Mastering the Mental Game of Trading. This book, which was published last month by the publisher Harriman House, is available on Kindle, Audible and book form. The book is received some fantastic reviews. It goes deep into the process of trading, into the mental aspects of trading, deep into who you are as a trader, and explores these from a unique and new angle, and introduces some amazing frameworks which help you get a much deeper understanding of what you are doing when you engage with market, when you take risks, when you trade the market. The book, as I said, is available on various forms, so do have a look at it, and if you do enjoy it, please do leave a great review for us on Amazon. Now back to the podcast.
Now, I've got a question for you. I mean, it's a slight curveball, but actually it's quite a pleasant one. You talked about your journey where you were going for like 4 years, and then suddenly something happened and something changed, right?
Yeah.
So what changed? Was it you suddenly worked out something on the technicals? Was it something around your process? Was it a aha moment? Yeah. What happened?
I can pinpoint it, and it's a really good story because it involved my ego quite a lot. So I came from an FX background, selling forwards and options, and actually physically watching people put in orders into the market and it affect the charts. So that's the background. Like at High Effects when I was there, the currency turnover was like, I think it was like, if I'm not wrong, don't quote me on this, but like 200 billion a year or something like that. They used to put into the currency market. So we used to get orders in on the EFX desk, process them, and I used to see the markets move sometimes. And I took that to heart. I was like, wow, I can be a specialist in FX here. Like I can see this, and I'm watching FX move, and I was like, wow, like I must be able to learn everything about FX and know FX. When we're talking about that year four mark, the system that I was employing in FX wasn't working amazingly. It was working a little bit, but not amazingly. And I just thought, oh, this is annoying. I'm going to go and try it in a stock. So I was like, I'll try it in like Microsoft or Apple or something and see if it's better. Lo and behold, it started working better on a longer term. So I changed the time frame and I changed the asset class that I was looking at, and it started making money. Then I looked at myself in the mirror and I was like, God, I've come from an FX background. I've worked in the doldrums of the FX market, selling on the phone, watching, things go through the market, writing analysis reports about politics, geopolitics, and central banks. And now I'm going to employ the same system in stocks, and I'm earning more money in stocks. Anyway, I had to swallow that bitter pill and realized that I knew absolutely nothing about FX after all of those years in FX, and employed the system in stocks. And I started making money swing trading stocks and holding my positions for a lot longer than I was in the FX markets. And I was holding like this one year in the S&P 500. I managed to layer about 8 or 9 positions throughout the year. And that was one of the biggest trades I ever had. And it was the same system that I tried to make in FX, but I made it in stocks. But it just worked much better in stocks because the trends were more pronounced and the trends were a lot smoother. And I had to fight my own ego to let go of FX and leave it behind and move into a new asset class. And it started working. And that was after year 4.
Oh, but that's brilliant. And I think I think when you have that ability to be agile, and I guess there's an entrepreneurial kind of mindset that where you guess like, okay, I guess need to stop this, and I guess need to reinvent
Yeah.
myself and reapply it, and equities are now my world. And there's a
Yeah.
discipline behind that, and to some extent, you kind of need to be quite brave to say, I'm walking into a world where actually I don't know much about, but actually my system's working, so actually I'll just follow the system.
Yeah, and it felt foreign to me because I had to start learning about market caps. I had to see how the system worked when earnings season was going on, and it was completely foreign. So like the main thing I used to worry about in the FX markets was like like the FOMC days and the Bank of England days and all of that kind of stuff. But then all of a sudden I had different variables that I needed to factor in, and I had to work out how they were going to fit into this system very well. And when we talk about technical analysis and statistical analysis, the statistics is my favorite subject. So I worked on a sports betting desk. I play poker. Like statistics and probability is where I feel like is my strong point. So having to match those things together and test and stress test my trading systems, that's where it was just like, well, why did I waste all that time trying to perfect a market that I maybe couldn't have? And I then just ran with it. I forgot about the past. I sat there and thought, well, I wouldn't get to this journey where I've got to without having done all that work in FX. So I just completely switched off from it. I moved on and I thought, this is working. I'm going to run with it and see how it goes. And it worked. So that was it.
Okay, Rajan, what do you think really supported you in your journey? I mean, that's you've become a successful trader. You're now teaching other traders who are coming into your prop firm. I also love your humility. You've got a really nice grounded sense of humility. But what is it that you think really is your edge? What this is a very difficult job and not many people succeed in it. We know that the percentage is very small. What do you think, or what are the pillars that stand behind you in your success?
Yeah, thanks for saying that. And there's a few things that I feel I'm good at. It's like I'm really good at being uncomfortable, right? So I had a bit of a tough upbringing in life, and I think that put me in really good stead to be a trader. Like I in day trades and in trades, like whether they're underwater, whether they're going well or not. Um, when I cross that white line of trading, I can compartmentalize anything else that's going on. Like when I've switched on to trading, I'm trading. There's nothing else that I'm doing.
Mm.
So my alarms are set. You know, when I chose a position, I'm happy to lose it. I'm happy to win it. I'm just going to execute my plan to a T, and that's a strength of mine. Like being comfortable, being uncomfortable is something that I can do. I know I can physically do that. Other than that, beyond that point, the statistical edge of understanding that I can lose. So my win rate always hovers around 50%, 52%, 48%, 55%. It's always around the 50% mark or just above the 50% mark, my win rate. So I do understand, like today, I was trading Meta and I was pipped out by like 20 cents and it shot off in my direction after. And I don't mind because I kind of trust my statistics that next week I could be 10 cents away from my stop and it not get hit and it can go in my direction. Or the next day after that, it could just go straight in my direction. I'm quite comfortable with those aspects of trading now. And the reason why I made the live trading room with the help of my colleagues is that I think that's where a lot of traders struggle with these things. So when they're in the trading room with me live, it's on Discord, that they can see how I react to these situations. And I often deal with them with humor. So like if for example I get stopped out and the market goes in my direction, I'll just like put an angry GIF in the chat or something like that. Or, you know, like I'll just make light of it because they've seen it from some of my previous trades where I've won a trade in 10 seconds. And they'll say, "Oh, Raj, you're lucky that you won that trade in 10 seconds." But I said to them, "No, I'm not lucky. Do you remember last week when I was stuck in a trade for 7 hours and I had to close it because the market was shutting at 9 o'clock?" And you know what I mean? Like, so they get to see this process every single day. And teaching as well and being live, that makes me more accountable. So having to do these things in front of everybody live with my account open, they can see the monetary values of the trade, they can see my stop loss, they can see my target. It holds me accountable for how I trade, being in that room in front of those traders. So it goes both ways.
Okay, so that's fascinating. So I'm hearing a lot of different things there. I mean, one is that you're held accountable, which is brilliant. And another one really is your adherence to process. You know the importance of the process, as we always like to say here. It's the process that delivers. There was a few other things you said there. One is that, you know, you're comfortable being uncomfortable, which kind of stands up slightly against the idea that you're risk averse. That almost sounds like somebody who's not risk averse. You know, it would be interesting to explore that one.
I'm risk averse at the right time, Steve, because like running and owning a business is, you know, I've done my risk profile and stuff, the compass, and I do come under the adventurous scale. So I have an adventurous risk profile. But the thing is that when it comes to trading and the process of trading, I look back through my trading history, and if the trades that hit my stops most likely kept going further down. So I know that process is what saves me money. So if I carried on trading and I looked at all of my losers for the last 100 trades, if the ones that all got stopped out, I had a little bit of hope for, which, you know, a lot of retail traders have, and I think, oh, if I just move my stop a little bit, I might stay in. If I did that, I would have lost more money. So I've gone back and I've looked through all of those trades, and the ones that hit my stop, I would probably say 60-70% of the time carry on going south. So I know my stop's in the right position for the right reason. I do understand that process.
Okay, so that's interesting to me, because that's what I would call as kind of risk aversion as a bolt-on. You know, your natural personality is risk tolerant. And we see this with lots of really good traders, individuals who are highly risk tolerant, but the bolt-on they add is really a high degree of risk management, or that appears to be risk aversion, but it's not. It's bringing in some sort of risk management into their process that they may naturally not have. And we see this with
Yeah.
a lot of people. We see this with a lot of people who we would call, who are very excitable and very intuitive, but they lack structure. So they've brought in a bolt-on of structure into their trading, and vice versa. People who are very structured, who need to let go a bit and lighten themselves and act with more
Correct.
intuition. So it's really
Yeah.
interesting you said that. The other point I want to bring in is about this being brought up with adversity. We see this time and time again. People who had a difficult upbringing, somehow they seem to be better equipped to be traders or deal with the rubbish that comes from markets and being a trader than a lot of other people. And we just think, we don't know why that is, but we theorize it's something to do with not having an illusion that the world is going to work out the way they want, that they know somehow that the
Yeah.
world is acting against them, and therefore, you know, it's not going to bend to your will. So it's almost like your background has humbled you somewhere, and you bring that into the markets.
Yeah, I'm gonna I have to thank you guys actually. I think the work that Steve and Mark do, the work that you guys do, and having listened to your lectures a lot, I went to see a psychiatrist for a while, for probably maybe 8 9 months, could have been up to a year or something like that. And it wasn't the goal to become a better trader. That wasn't the reason why I did it. There were other reasons that were going on in my life at the time. But one thing I did work out when I was going through that process is that um, like, one, if you're unapologetically yourself, that really helps. It really, really helps. Like, just I don't, to be honest, I don't like to be unliked, but not everybody's going to like you. You know what I mean? That just happens in life, you know. But if I can unapologetically be me, I think I'm going to be a happier person. And for some way or another, that kind of shines through in your trading. I say to the guys who are at DND Capital with me, I say to them, if you're an idiot, be an idiot. If you're a good person, be a good person. If you're funny, be funny. If you're shy, be shy. I was like, I don't care who you are. Just be yourself around us. I don't, if outside of our office or outside of our meetings when we meet up, and you're with your family, you're with your friends, do whatever you want to do. But when you're with us, you be yourself, unapologetically be you. I make that a point of course. That's why, like, our equality, diversity, if you come to one of our meetings, you'll see people from all kinds of backgrounds, all different ages, all different sexualities, all different ethnicities, and that's an ethos of our company, because that's what makes us good traders. We don't, we want everybody there to be unapologetically themselves, and that's one of the reasons why I went through that process. And going back to you just saying, why do we think that people who have struggled with adversity can handle that, or they become good traders? I think like, for me personally, I can't speak for everybody else who's been in this situation, but for me personally, having not had a voice a little bit when I was a small child, but going to school acting like nothing had happened. So, like, at home or whatever, I could have been in turmoil, or it could have been a whirlwind. Anything could have been going on. But when I went to school, I had to act normal. When I went on a football pitch, I was, you know what I mean? I was a captain on my football team, and I was a good footballer. And that was my kind of my space where my mind my mind was clear. So there's that disconnect of compartmentalization that I think works for me, like my exercise, my trading, my home life, all of that kind of stuff. I think the ability to that's where the sports performance and the home life really kicked in. When I crossed that white line of playing football, I thought about nothing but football. When I start trading in the afternoon for the US session, I think about nothing but trading. So I have that ability to switch everything off in the background and just focus on what I need to do at the time. So that's my take on it, but I can't speak for everybody else who's been in that situation.
Yeah, that's brilliant. My book talks a lot about this battle between the self and the ego, and that the most powerful version of yourself is you, and there is nothing more powerful. Being authentic is where true power is. That ability to let go of the ego and just do what your process demands. Don't worry about what anyone else thinks. Don't worry what you think anyone else thinks. That's where the performance anxiety that does so much damage. That's where it comes from.
That has to be learned, Steve. That has to be learned. I didn't know how well perceived I would be or how well accepted I would be running this company until I started doing it.
Yeah.
So I'm very fortunate to have very nice business partners, very nice investors and stuff. And sometimes I'm out with them or when we have our monthly meetups and I sit there and think, well, they must think I'm bloody crazy, or they must think I'm mad. But the thing is that like I think if that wasn't the case, I don't think this would work. So I get humbled when I'm with them, my investors and my other colleagues and the people that I started the company with, because the ethos that we started the company with, I don't think there's another company that I've worked for that's open and inclusive. So I'm very happy with how that went.
Yeah, I think the model appears to be fascinating but powerful. The bringing of different minds together, listening to the quiet voice in the room rather than just following the big loud voice, which often very much is the case in trading environments, and giving people space, I guess, as well to actually participate in dialogue too. Now, of course, we talked about your methodology around dealing with the ups and downs, but it's not all been a bed of roses, I imagine, even in recent years in terms of trading. We know that sometimes even good plans can go wrong.
We'll be returning to this excellent podcast in a minute. Just a quick reminder about our podcast sponsor, the Brilliant Society of Technical Analysts. They have a superb one-day conference coming up in London on Tuesday the 16th of April. If you can get there, it will be a great chance to network. And they have some incredible speakers lined up, including the amazing Linda Rashke. Go to their website, technicalanalyst.com, to find out more about it. Also, do check out their brilliant home study course, a great way to advance your trading. Go to our website, alpha-mind.net, where you can learn how to get a £100 discount on this brilliant program put together by some of the leading minds in technical analysis. Now, back to the podcast.
And do you think that you being able to manage it by being comfortable in just stepping away or doing something different is the way that you manage that turmoil and that emotion that can suddenly erupt if something just doesn't go to plan? How do you manage it?
Yeah, I think I say to the traders at the end of every day that tomorrow's a new day, regardless of how today's happened or what happened today. Is like we have to move on. So the analogy that we've had from a couple of people is that Tiger Woods on the 16th hole or whatever it is, when he moved on to the next and he forgot about the one prior. That's something that I try to work on quite heavily. So when at the end of the trading day, regardless of how that's done, I write in my journal, which is also open for all of the other traders to see. I write in there, it's like, oh, I took a trade today, I had a good entry. Unfortunately, it wouldn't have worked out, but I'd take this trade 100 times again if it turned up. And that kind of rationalizes that for me. If I have a rubbish day trading, is that I, in Steve's book, he talks about the closure process. So I try and work on that. Like, okay, when I was a footballer, this used to really, this was a very important part. Is if we went one goal down or two goals down in a game, I didn't care. I genuinely didn't care because it happened. I used to look around at my teammates and the ones that were sulking, and I used to say, "What can we do about that goal now? The goal's gone in. Like, there's nothing we can do about it now. Just get your game face on. We've got to try and get a goal back in this game." And I was relentless in that pursuit to finish the game, having caught up after being one goal down. And I try and take that ethos into the trading side, but away from trading. I run every single day, Mark. I exercise quite a lot, and there's 2 times of the year where I switch off completely. In the summer, I take 2 weeks off trading. My wife's family is from Sardinia, so we go and see our family, and get to spend a nice bit of time in the summer in Sardinia, which is one of the best places in the world. And then in Christmas as well, when volumes are low, I stop trading for 2 weeks as well. So for 4 weeks of the year, I do not look at the charts. I do not look at my screens. I don't talk to anyone about trading for 4 weeks in the year. So that I make sure that I do that.
Interesting. I knew that sport would come back into this at some point, that there was this philosophy that kind of runs through and is, yeah, it's quite convenient to have that. And do you feel at times as though you're in a game? Does the gamifications sort of fit in with how you're evolving the business?
Yeah, I've never lost that feeling of being a
Mm.
captain. So, like for every football team I played for, I was the skipper.
Yeah.
So I've never ever lost that. So whenever we're in the markets together, or we're at a company, we're as a company trading together or something like that, I'll always look around at my teammates and make sure that they're all performing okay. And I would always try and lead by example, and try and work on that. And yeah, that does the sports performer in me has never left. Even now, like I was playing football for my local football team like 2 seasons ago. I'm now 38, and I should have given up ages ago. But like when I step onto a pitch, I feel most at home. That's where I feel really, really comfortable. And same with my trading and my trading desk. When I'm with the guys at our monthly meetings, we meet up every single month for 2 days, and I feel really at home in that environment, and I feel quite comfortable in that environment, and I hope they do too, whether they're winning or losing.
No,
Do you feel that?
I was going to say that's quite rare in the whole space here. It seems a luxury that you'll be able to you hold it as a team, and there's that mutual respect with you as kind of like the team manager. It's not often the case in the world of trading, but the fact you've got that, fantastic. Sorry, Steve.
Now I was going to say, do you believe that that singular purpose as a team that you've got, that kind of respect for each other, plays a huge part in the success of your people?
Yeah, I think so this year's performance, or what we've done this year, I didn't think it would go. I didn't have any goals in mind. I don't keep goals. So that's one thing about me. I take each day at a time. I don't say in 6 months' time I want to be here, a year's time I want to be here. I never do that. So when my business partner, she does, Trish, I'll give her a shout out. She does, and we're way ahead of where we thought we would be at the moment in terms of how many traders that we currently have, and the assets under management that we have, and our trading performance. And I sit there and think, well, Trish, if trading comes first, if we do the right things every day, the future will take care of itself. That's the ethos that we try and develop. Obviously, that makes me very unorganized, because I don't plan ahead very much. So there are other people in the business that are much better at planning than I am, because they'll plan events 6 months in advance, or if I have to go and do a show or a speaking slot somewhere, they'll help me out with that. But that's the reason why we're a good team, because we've all got different strengths and weaknesses, and we have to leverage those things. Like, there are people in the company that are much better at things than I am, and I'm so happy about that, because one, it means that I don't have to do them, but the second thing is it means that they're happy in their happy place. So that's all good with me.
Mark, it sounds like us. Mark,
Yeah.
Mr. Don't worry, everything's going to work out, and Steve, Mr. Always worry, get everything down to the detail.
Yin and yang, mate. Yin and yang. It works very well.
Yeah, it does.
I've long been a believer that the industry needs to think a lot more about the way it does this job. I mean, there's a whole paragraph in my book dedicated to that. You have to think about developing your people. But, we've worked with a few organizations, and we see the difference of a leader who has those values and respects their people and wants to develop them and bring them on, and what that does to the entire trading of the business as a whole, to the performance of the business as a whole. And that's right across the industry. And it's rare. It's not very common, but it's about creating a culture of high performance and success which is built around a culture of respect and, obviously drive for results. But, can we support people? Can we recognize that everyone's different and everyone has a different way of doing it, and that almost honor that difference? And then you get people making money from all different backgrounds in all different ways. And you might get some people who make a load of money in big size and it's a bit more volatile, their performance. And then you've got some people who are just consistently performing without the big volatility in performance, but so often they're moving the right way.
Yeah, listen, there's two things about that I wanted to kind of bring up. So the first thing is that like we don't know how well this is going to go for how long. Nobody does. And I'm comfortable with that uncertainty. I don't know if the processes that we've put in place at the moment have been working very well for the last 6 months. I don't know if they're going to continue working very well for the next 6 months, but we're willing to give it a shot with the correct risk parameters. That's what we've done. So each of us, we have a maximum drawdown of 20% on our accounts. All of us do. We have a maximum amount of risk tolerance that we have per day as well. And we have alerts that send us through if a trader's getting to their maximum drawdown or hitting their daily risk tolerance. So we have that. And I don't know in next month or 6 months' time whether we're going to perform to the same level that we are at the moment. But all I do know is that we've built ourselves a comfortable buffering level to find out. That's what I do know. The second part about that I wanted to talk about is when I was working on the Squawk desk with a mate of mine, Justin. He works at Reuters now. We were bored at Christmas. It was so boring at Christmas. No news was coming out. We just had to man it just in case something crazy went on. We looked over the last 12 months of reports from the big investment banks. So we're talking, I know you used to work at Credit Suisse. I'll throw their name in there. Credit Suisse, Nomura, Morgan Stanley, JP Morgan, Goldman Sachs, all the big banks. We looked at the last 12 months worth of FX reports. None of them were in and around or more than 50, 60% accurate. None of them were. And I knew these guys, and I knew they were all getting paid very well, and they were writing reports, and they were sending out these reports to us and to the street and everything. And I'm sitting there thinking, well, they're getting paid like 250 grand a year plus bonuses, but they're only right 50% of the time. I'm only bloody right 50% of the time. What's the difference between them and me? And that's where I built that confidence from, of not giving a crap about, what's going to happen in the future or not. If we've got the top minds in the world working at the best investment banks in the world, and they're only right 50% of the time, and I'm only right 50% of the time, I'm on the same keel as them. That's where I am now. That's the way I thought.
There's a very famous analyst who's won Analyst of the Year, I think almost every single year from 2010 to 2020, Stock Market Analyst of the Year. Yeah. And he was bearish throughout that entire period. Hello, the biggest bull market ever.
Yeah.
The number one analyst has been bearish. It is quite bizarre, isn't it? But he was voted that.
Yeah. In your book, you had that quote from Bruce Lee. It's like, be as fluid as water.
Yeah.
That quote, right? I love that. Because every day, I don't know what the hell's going to happen, but I'm going with the flow. Like I'm trying to be as fluid as water every single day, and that's why I love that quote.
You've got to put it. I love sharing the stories of some of my clients with people. Obviously, I've always got permission from them to sell them, to use them. And there was one who was just so bearish a particular market. Actually, no, he was really bullish a particular market. I do apologise. And there was this big event coming up, and he was just, you could not imagine a more bullish person. Anyway, the event came up that was completely flipped the market on its head. And I was thinking, oh no, he's got absolutely killed. And then when I went to the next session with him, he's like, I absolutely smashed it. I said, what happened? He went, something didn't feel right. Something didn't feel right going into it. I saw some news, some stories, and I started to have doubts, and I turned the position, and then I was small the other way. And then when it came out, I was like, I was straight on it. So that's the sort of thing. Having a view is not the same as trading the market.
No, it's not. So do you know when I worked on the Squawk Box and I used to do the European stock sheet in the morning? It was so funny because I used to look at some of these companies that used to produce their earnings reports, like Rio Tinto, Anglo American, all of these guys. And regardless of how good their earnings report was, or how much they beat their consensus estimates, depending on what the sentiment was for the day, that would be how much that they would move or not. So they could give you the best bloody news in the world but only move like a few pence because the market was bearish on the day. And I sat there and I was like, that's not fair. Like this company has worked really hard. They're producing copper at a ridiculous amount, and their margins are amazing. But the market, because of how investor sentiment is not giving them their dues. But I did notice was the market breadth. Is that when markets then used to turn positive again, those stocks used to move faster than everything else because it used to kind of catch up with itself. So they're the kind of things that I learned in the process of working in the city is that fine, you can beat consensus estimates or you can outwit sentiment. And because sentiment might be rubbish or good or bad on that day, it might not match up for that day. But over a long-term period, it can catch up with itself, and they're the stocks that you want. So at the moment, if we're having a bearish day, I'll watch all the stocks that are positive, but they don't fall as much as everything else, and then I'll try and work that way into the future or something like that. Or they'll stay in my mind or something like that for the future. So they're little nuggets that you can get from working at different places when you perceptive, basically.
Benjamin Graham, in the short term, the market's a voting machine. In the long term, it's a weighing machine.
That's a great analogy. Yeah.
Yeah. Anyway, listen, I'm mindful of the time, and I'm going to hand over to Mark in a minute to perhaps try and bring us to a summary. But I'd love to perhaps for you to tell the audience where they can find out more about you and your work.
Yeah, so we're obviously a UK-based company, but we have traders from all around the world. So dndcapital.co.uk is our website. But a lot of people contact me on my LinkedIn page as well. Rajan Dhall, MSTA on LinkedIn. So yeah, we're quite open to talking to new traders. We're happy to learn about new systems and understand how other traders do things. So I'm always happy to get traders to come to our open days and socialize and talk to other people. It's always interesting to see other traders and see how they get on and do things.
Brilliant. Okay, and we'll put all that information in the notes for the show so people can go there and look up the notes. And you talk quite often at some of these trader events in London as well, if I remember rightly.
Yeah, so I'm doing the London Investor Show in March, and I also obviously am always at the STA. My next STA talk is, let me think, May. I'm doing the May STA talk, and in that one, I'm gonna be completely open with the systems and how we trade. So not many people, when they do a presentation like that, they actually tell people their trading systems and how they come to it. So I'm gonna open it up because basically to pay homage to the STA because they taught me everything. It's kind of like a pay it forward thing. I want to show people how we did it back. So
brilliant. And when's that that trader show? Is that Simon Campbell's group?
Correct, yeah. Simon's one is the 8th of March, and then in May I'll be talking at the STA in Moorgate. Yeah.
Okay, brilliant. Okay, so there's a little bit of publicity there for that as well. Do go down there, and people can meet you, I should assume, as well. Is that correct?
Yeah, of course. Yeah, and I'll be doing a talk there as well. So yeah.
Okay, brilliant. Okay, so I'm going to hand over to maybe we'll put some notes about when that event is as well on the show notes. So if you're listening to this, we're going live with this, I think, in a couple of weeks' time, so it should be before then. So, Mark, over to you.
Yeah, thanks. Great chat, Raj. I mean, we've been everywhere on that, but understand your story, what drives you, what's driven you into this wonderful little piece of business that you own. And I think really really understanding the positive impacts that great leadership can have on, a system. And just seeing it optimized. There's just a bunch of guys under their team manager, as it were, just driving them forward with a real open philosophy and diversity and being happy to share, the journey together. Yeah, really remarkable. A couple of quotes that showed up for me. I do the right things every day, and the future will look after and take care of itself. Yeah, that's that's interesting. We're on a journey. Part of that is being educated and sort of teaming up and getting access to the right type of information. We know that the world of trading, often people are tuned in to perhaps the wrong quality of information. And you've shared, how people can get in touch with you and certainly the STA to access, what the pros are talking about and those various flavors that are really, really important, rather than stuff that quite frankly isn't. And quite clearly being comfortable with uncertainty, but also being comfortable with being uncomfortable is a really, really big message that keeps you going through the tough periods. And perhaps this agility as well, and this entrepreneurial spirit that you bring into your business, I think clearly is a really, really helpful approach. And perhaps to end this little summary with that comment from Bruce Lee of, be like water. So Raj, many thanks.
Yeah.
Brilliant chat.
Thank you, Mark.
Yeah, much appreciated.
Thanks, Mark. And thanks, Steve. And I do want to say thank you. Like, I make it a prerequisite to some of my traders to listen to certain episodes of your podcast, and also to listen to read Annie Duke's book, Mark Housel's book, and Trading in the Zone. And I get a list of 4 or 5 podcasts of yours that I make it. They're not allowed to talk to me actually until they listen to this stuff or read these books. So just to let you know what you guys are doing for the
only 4 or 5. There's another 123, Roger.
You know what? I have actually probably listened to them all. Your new book is actually part of that prerequisite list. So I'm definitely out there. We've got like 20 for all of the traders. Yeah,
we're a
huge fan.
So
thanks, guys. Thanks for the work.
We're a huge fan of Annie Duke. I also tell people Fooled by Randomness. I think that's a brilliant book. It could be quite hard listening, but the concepts in there. But listen, thanks for your time again. Absolutely brilliant. Thank you for listening to the AlphaMind Podcast today. We also want to extend a thank you to our podcast sponsor, the Society of Technical Analysts. Do check out their brilliant home study course, and you can see more about that at our website, alpha-mind.net. And of course, if you're keen to know more about how AlphaMind can help you, please do also look up further details of our services on our website, or reach out to us at info@alpha-mind.net. That just leaves us to say thank you, and we wish you the best of luck in the weeks ahead.